Terrible day for stocks, ended at the lows, equities under extreme pressure. I'll reiterate the point I made at the top of the show, which are there are two really important questions that traders and investors want to ask themselves right now. The first one, what is your conviction that we're headed for a recession this year? As you think about that question, consider all the times that we've heard recession calls since COVID that have flopped, including last year's epic survey from Bloomberg. The economists predict a 100% chance of recession. Now, that's a very difficult thing to predict, but the reason why that's the first question is because the market is acting like that right now. Stocks that have been yellow have now broken down to new lows. I should have a red light on there because we did make lower lows in the stock market. Crypto actually didn't, which is why I've had the yellow there. Bitcoin is actually looking decent. I toyed with the green light on crypto for a second going into tariffs yesterday afternoon because I was hoping that we would get the 25% or lower rate, but we did not. The average and the median were both 27 and 28. That means that it was above expectations for tariffs. That big sign the president held up, 27 and 28%. We were hoping it would be at least at max worst 25. So this was the worst possible outcome. So the red light is on stocks. The bear narrative is strong. The technicals are there. You have to respect price. And so when you make lower lows, that's price. Crypto holds yellow because it's still in the range. There are a few things that might be some hope for stocks, but a lot's going to have to come into fruition in a positive way, and tomorrow's employment presents too much of a risk, even though I believe that the economy still has stability enough to withstand the tariffs compared to what we've seen in recent history, like in COVID. Today, one of our guests used the term the economy will freeze because of tariffs. We've been there, completely frozen. What tariffs are more likely to do, the way I see it, is apply a tax on everyone, yes, including us. It's basically like holding the scale where all the weights change. So if you're heavier, you're already going to have more problems. If you're weaker, tariffs make your situation worse. It's a bully move because we are number one, but it also might be a logical one, as we heard from William Lee very deftly arguing in that last segment. Go back and watch that. Firstly, here are the charts. 10-year to the 3-month. This is the curve I've been talking about since we started the show almost 8 years ago now. The yield curve is telling us that you have problems on the horizon, a bad combination of growth and inflation. Particularly important to understand that this curve is the only one that's really getting crunched that hard because the market is holding onto this inflation fear, some of it being spun up by tariffs, which are arguably disinflationary. But the point is the market right now is saying the Fed won't be able to cut. That's why you're getting this type of compression, which I've warned about. You don't want yield curve compression. You don't generally want yields going down. The other move is in the dollar and the message that tells us that's very extreme. The dollar just crashing through the support. But at least that high volume area at 103.7 I've pointed out did hold in eventually as the last line of resort, but boy did it crack. But does the dollar get through multi-year lows, including those that were in response to the epic COVID downdraft? There's actually a similarity. Remember, coming out of COVID, we were the first to bounce back. The rest of the world was under deep pressure after everybody else was. The market's basically saying that this time there's going to be an even bigger rotation. I still find it hard to swallow that these are bigger threats than what we went through with COVID. And the second question to ask yourself is, will the Fed be able to respond? Because the bond market basically is saying that the Fed won't be able to respond the way we need, but I don't think so. I think that we're going to hear from Jerome Powell. He believes tariffs are transitory. Listen to his language tomorrow. If he backs away on that, that is bearish. Also watch employment. I hope that jobs, and I think jobs will continue to be the ballast of the economy, but if there's weakness, boy, it could get bad. Have a good night.